Hi there, welcome to The Open right here on BNN Bloomberg. It's Monday, it never comes soon enough. Let's get to the big stories we are bringing you from our newsroom. Bloomberg says Newmont Corporation wants Barrick Mining to improve operations in Nevada before spinning off assets. According to Bloomberg, Newmont believes it has the power to potentially block an IPO of those mining operations. Barrick announced last week that it plans to spin off its North American gold assets into a newly listed company. That will also include interests in the Dominican Republic, but it's mostly about the flagship assets in Nevada, where it has a joint venture with Newmont. And Newmont has apparently been ramping up pressure on Barrick after a string of operational setbacks. Shares in Eli Lilly trading higher in the pre-market. That's after the pharma giant announced that it's buying biotech Orna Therapeutics for up to $2.4 billion US in cash. The deal is aimed at expanding Eli's pipeline of new drugs beyond its popular obesity lineup. Orna is currently developing a new class of treatments for certain autoimmune diseases. And speaking of weight loss, shares in Novo Nordisk jumping in the pre-market, while shares in Hims and Hers Health are tanking. Novo has sued the U.S. telehealth firm over what it says is patent infringement. That's after Hims and Hers launched a cheaper copy of Novo's weight loss pill, Wegovy. The move follows a warning from the U.S. Food and Drug Administration, which signaled a broader crackdown on so-called compounded GLP-1 weight loss drugs. And there's a look at U.S. futures. Looks like we're going to get a slightly soggy open for U.S. stocks this morning. Let's see how the TSX traded last week. We did see strength in gold this morning, with the precious metal getting its nose above $5,000 US again. So that could help TSX stocks at the open. First, though, let's have a look at oil, see how it's trading. There's a lot of focus right now on natural gas. U.S. production just hit record highs amid that cold spell south of the border and in parts of Canada too. Let's have a look at gold to see how it's faring this morning. And sure enough, gold getting above 5K once again. And let's have a look at the Canadian dollar. And quite a rally there, up about 0.5 cent US and 0.4 cent, and chasing 74 cents. And finally, Bitcoin. Let's see how that big crypto is doing. It's had a rough spell. It has slid from the record highs of late last year, and look at that, still struggling below 70,000 US. The Dow Jones Industrial Average closed above 50,000 for the first time ever on Friday. The Dow Jones, of course, kind of gets it's seen as a second string player because people note that its construction is rather odd and it has just a few stocks. But let's get more on that benchmark and the latest in the markets. We're joined by Brian Seitel, Co-Chief Investment Officer at the Banson Group. Thanks very much indeed for joining us.
Thank you.
I think at one time, when people used to phone their brokers in the old days, they'd say, how's the Dow? But you don't really hear much talk about the Dow Jones average these days, mostly about the S&P 500 and the NASDAQ.
That's true. You know, the Dow is a price-weighted index. S&P is cap-weighted. It has 500 names in it, and so it's a broader index. That said, it has become so overvalued in the technology sector now. It's about 40% or so in tech and communication services stocks.
Wow.
That the Dow is actually still a good barometer to take a look at what the underlying economy is doing.
That's interesting. Yeah, we kind of forget that it's not just railroads and steel companies. They have kept up with the modern economy, loading it up with tech stocks.
That's true. And what you've seen in 2026 year to date is this continued rotation from some of those tech parts of the market into more of the value-oriented components. And so the Dow is actually outperforming the S&P 500 by a wide margin on the year. And I suspect that that isn't the ninth inning, but more closer to the first or second inning here as we progress through the remainder of the year.
What is your feeling about the broad market, Brian? Obviously, there is a bit of a chill wind blowing through the software stocks. Start off with them. Are you seeing value there in traditional names such as Adobe, for example?
We do see value there. I mean, the software names have really gotten pummeled with Anthropic and Claude and their Opus One 4.6 release and what they may do to some of those business models and take some of the market share. But if you look at the software services businesses, they've gone from about 35 times earnings all the way down to about 23 times earnings in about a month and a half. So they're on sale. I don't think those business models will be completely supplanted by what AI may bring. And so there's value in the space, no question about that.
You are seeing a continued rotation here. One feature of that from growth to value stocks?
That's true, and a lot of that is just valuations. You know, valuations were very high in the tech part of the market and the growth part of the market. Small caps had underperformed for a very long time, and so you're seeing that rotation continue to unwind here in 26, and I think that is something that will be an ongoing theme here as we progress throughout the remainder of the year.
So you do say there's froth baked into the market. However, the outlook for profitability pretty good. I mean, company earnings have been great, and we're going to get tax cuts, et cetera.
And those are all bullish statements, you know, and that's why there's a tug of war right now in markets. It's about all of the good things that may be happening. We've got expanding PMIs and ISM services and manufacturing data, coupled with a weakening labor market. And then, like you've said, some deregulation and some tax refunds that are going to come on down the pike here in the next couple of months. So there's a back and forth, and what it ultimately is coming down to which part of the market is reasonably priced versus which part may be a little overdone. And there's still a question mark around what AI productivity may or may not bring and what the ROI actually is associated with that.
What about the hundreds of billions of dollars? We're up into the trillions of investment in hardware, essentially. I know some of it's software as well, though, to provide cloud computing driven by AI. Does that a smack of a bubble as far as you're concerned?
I think there's components of it that could be bubblicious, I'll call it. But that said, you know, there's this a question mark on ROI to that stuff. And by any metric, on any calculation, it's a very long time period before there's actually profits associated with that amount of money spent on it. And so again, it comes down to what you're paying for these companies, what's already priced in, and what's more realistic from a business model perspective. Those big tech companies can afford the investment. So that's not at all what I'm saying, but it's you know, to be seen as far as the actual return on investment.
It's interesting. I mean, Amazon striking a deal to get copper from a mine, a Rio Tinto mine in Arizona. It's come to that, where Amazon feels it needs raw copper.
That's true. I mean, this is an energy and a commodity associated benefit from a lot of the data center capex that has gone into AI, and all of those things are relevant in today's market, which is why this is touching most sectors in the market. And from our vantage point, focusing on those industrials, those energy names, some of the staples, the defensives that have frankly not participated quite as much, is a better way to play some of this expansion here into 26.
One company that's catching your eye is Blackstone, BX, huge in the alternative investment space.
That's true. It's a behemoth. It's best of breed. It's got a 365 yield on it, so you're getting paid while you own it. It's a bit of a baby thrown out with the bathwater here. A lot of those alternative managers have sold off alongside some of the software sell-off because a lot of them are financing, you know, those businesses in the form of private credit. That said, you know, I do think there's value in the name. It's growing distributable earnings at about 18% a year, and is trading under a market multiple at this point. And so I think you can scoop up shares of Blackstone here.
You feel there's a cloud over private equity because of worries in the private debt market?
Not necessarily on the private equity. Those two things I would treat differently. You know, when you have bank covenants and ratios calculated in software businesses that have 40 45% margins in them, and then you have other businesses that are going to take market share, that can be a risky play. There's also a higher level of payment in kind in the private credit market associated with software businesses. And so that's why you've seen some of the weakness in the alternative managers. But that all said, Blackstone is a hyper-diversified business with real estate, credit, and private equity. And you're getting it on sale here for, like I said, best of breed in the space.
Thanks very much indeed for joining us this morning, Brian.
Thank you.
Brian Seitel, Co-Chief Investment Officer at the Bahnsen Group. Okay, lots more coming up on the Open. You are watching BNN Bloomberg. That new Canadian consulate has opened in Greenland, and of course it helps draw attention to Arctic sovereignty for this country. CTV's Abigail Beeman has more in this report.
You have been nothing but a friend.
Canada's Foreign Affairs Minister met with her Danish and Greenlandic counterparts and toured this Canadian Coast Guard icebreaker vessel docked in Nuuk.
And I thank the people of Nuuk and Greenland and Denmark for being so warm and welcoming to Canada and Canadians. We stand with you.
It is deeply appreciated. It brings comfort and reassurance.
Greenland wants to mirror Canada's newly opened consulate with a diplomatic presence in our country in the years ahead.
This is a kind of new beginning with the consulate in Nuuk.
As for threats from Donald Trump about annexing Greenland,
I don't think about it.
No.
At all. So.
Do you think it was real, his threats?
No.
leaders here say things are better than a month ago. Diplomatic talks with the U.S. are underway with new meetings scheduled. But the Danish foreign minister won't say if the U.S. has agreed to their so-called red line of sovereignty.
We are not out of the crisis, and we do not have a solution yet.
We are not there where we want to be yet. There is going to be a long track. So where we're going to land at the end, it's too early to say.
Too early to say for a crisis that has dragged on for the people of Greenland. One man told me today he still can't sleep a month later, worried about the American threat. Abigail Beeman, CTV News, Nuuk, Greenland.
Apparently one dish that you could try if you visit Greenland is a thing called kiviak. It was a thing that the Inuit did traditionally to get through the winter, and it consists of hundreds of auk birds, dead auk birds, stuffed into a dead seal and left to ferment under a rock for about 3 months. And apparently that would provide traditionally sources of vitamins and minerals during the bleak winter. I bet it's pretty pungent, though. Still ahead, the IMF is warning about the waning strength of the US dollar and what it could mean for the global economy. That's just ahead. Let's take a look at a chart for the US dollar, because that has been persistently weak, partly because of an expectation that the Fed will be cutting interest rates again. So it's down about 9% over the past year against the euro. There's a longer term chart to give you a bit of perspective. The IMF managing director has spoken about the waning strength of the US currency, and also what it could mean for the relationship between investors and borrowers and the implications for the global economy. We got more perspective in a Bloomberg interview from the sidelines of the IULA conference in Saudi Arabia.
What we have seen over the last decade is emerging markets making huge progress in terms of monetary fiscal policy, their capacity to navigate in a world of uncertainty. And thank God they did it, because we are indeed at a time when geopolitics, technology, demography, climate, all are acting forcefully and creating this fog of uncertainty within which we operate. I'll give you two examples. The first one is when we look at the role of emerging markets in the world economy, they are now the bigger force because since 2000, their size has doubled, more than doubled. Now they are measured in PPP, 56% of global GDP, and they contribute 75% of global growth. So they play increasingly a very important role for the world as a whole. And two, because they have invested in good policies and strong institutions, they are more capable to play that role.
Yeah.
I think it would be fair to say we all have to do more.
Okay. Let me ask you about another big development that has occurred in markets over the last, say, 18 months, the decline in the USD. And you have talks of central banks, sovereign wealth funds looking to shift away some of their allocation away from the US dollar. How does the IMF view this?
Well, we should not get carried away by short-term variations of the exchange rate of the dollar, and we should look closely as to why the dollar plays such an important role in the international monetary system. First, over time, we have seen the dollar going up and down. And actually, the dollar being somewhat down now is good for many emerging markets. Those that borrow in dollars now have to pay a bit less. But also what we know is that the reason the dollar plays such an important role is the depth and liquidity of capital markets in the United States, the size of the economy, the entrepreneurial spirit of the U.S. So I don't see a change in the role of the dollar in any time soon.
Okay. So you don't see that changing anytime soon. The other, I was just watching the panel now with His Excellency Mr. Jadran, and he mentioned that markets can be brutal, particularly when it comes to economy spending plans and fiscal and rebuilding fiscal buffers is another big narrative that has emerged out of this conference. Do you think that countries are taking this seriously enough, especially when, again, investors are tending to punish countries that seem to be overborrowing right now?
Well, countries better take it seriously. What has happened over the last couple of years is COVID, the war in Ukraine, they all led to government spending more to support businesses and households, rightly so, at that time. But what is the result? Fiscal buffers almost everywhere are depleted, and shocks are still to come. Therefore, what we say to everybody, to advanced economies, to emerging markets and developing economies, is now is somewhat better time. We have seen the world economy quite resilient to these shocks. Please concentrate on rebuilding these buffers. You need to have a medium-term prospect for how your fiscal position can be strengthened to withstand the shocks that inevitably will come. How are governments doing? Some better than others. And I can tell you where I'm particularly concerned is for vulnerable middle-income, low-income countries that are particularly stretched today. So what we want is not only for them to do the right thing, but also for the world to be mindful of these countries. We have seen development assistance going down. Well, we have a responsibility for stability and security in the world. Help these countries.
Let's talk about one emerging market economy that has taken a lot of headlines over the course of this year so far, and that is Venezuela. IMF has said that it is standing ready to help Venezuela so long as member states recognize the new government. Do you see that happening anytime soon?
My expectation is that countries will be assessing relations with the Venezuelan authorities, and that this assessment is going to be done fairly soon. Meanwhile, we are not sitting on our hands. We actually, throughout this period of time, we have not been engaged with Venezuela since 2019. We have been monitoring the economic situation, and it is quite devastating. When we look at the shrinkage of the economy, from this big to only 1/3 of what it was 2018. When we look at the outflow of people, 8 million people left Venezuela as percentage of the population, more than Ukrainians that flew a war. And when we look at the risks of inflation going up, the lack of data, our message is the sooner we can have a better picture and an engagement with Venezuela, the better for the Venezuelan people.
Let's have a look at futures, U.S. futures, as we count down to the opening bells. You can see, we're likely to get a soft open today. The U.S. S&P 500 still down from its January 27th record, which was 6,978. So we're not that far off that level. And the Dow slipping from Friday, when it breached 50,000 for the first time. Interesting to think that venerable average, which is well over a century old, is stuffed with technology stocks these days. Let's have a look at gold. Gold, of course, tends to thrive when the US dollar drops, not least because it's just priced almost universally internationally in US dollars. The US currency actually holding its own today, but gold moving higher, still down from its record highs of just over a week ago. And let's have a look at oil. It has been supported to some extent by geopolitical worries about Venezuela and Iran. It's interesting, though, Bloomberg has a headline here: Indian imports of Russian oil seen halving on U.S. order. And of course, that does, if India is not taking the Russian oil, it does mean they'll have to get it from somewhere else. But then, of course, more discount Russian oil could be just going on the global market under shadowy conditions. And let's have a look at Bitcoin. And it hasn't been happy for the Bitcoin investors over the past few months. You can see the price sliding. Down below that $70,000 level today. Interesting that Morgan Stanley, though, sees hope here. Up or starting coverage of 3 Bitcoin miners, Cipher Mining and TerraWolf, seeing gains in the pre-market after Cathie Wood and her ARK Invest team further shifted their stance away from Coinbase, actually moving towards CoinDesk. But Morgan Stanley saying that TerraWolf and Cipher Mining look like decent bets if you want to own a crypto equity. Opening bells are next. And there you have it, the opening bells at the Nasdaq. Zevra Therapeutics is doing the honors. Over at the NYSE, it's American Eagle Outfitters ringing the opening bell. And at the TSX, it's Long Point ETFs opening the market. It's time for the first 15. Trading just getting underway. Let's check in on those North American benchmarks. And we did see in the futures market, U.S. stocks pointing to a softer open. And sure enough, that is the case. There is our market. We have seen some strength in gold. That has been a huge boost for the TSX for the past year and more. Our market's still down, though, from its close on January 28th of 33,176. That was the record high close for the TSX Composite Index. Some stocks of interest here. Let's have a look at Barrick. This is a fascinating story. Bloomberg reporting that Newmont is not happy with the actual state of those giant mines in Nevada that they own under a joint venture. And Newmont, apparently, it sounds like things have got a bit stroppy behind the scenes, a little contentious. Newmont saying, you know, we could block an IPO of those operations, a partial spin-off. Barrick is expected to retain retain control of those assets. Newmont, according to Bloomberg, critical of Barrick's management of Nevada, the joint venture, after what Bloomberg says years of underperformance, and Newmont apparently thinks they have a veto on the IPO. And let's have a look now at BRP, the maker of Sea-Doos and Ski-Doos. And you can see that stock's had a nice run. I'm not sure we could put up a 5-year chart. I'm not sure if it's been bouncing off the bottom. Seaport, the US, Seaport Global Securities, the US house, starting coverage with a buy recommendation. So you can see the shares are still down from more than 2 years ago, saying Seaport says that positive trends in power sports will help BRP, although dealer inventories and promotions are still higher than optimal. But they do think that BRP will increase market share in all categories, driven by compelling products. Let's check out some movers south of the border. We're joined by Jeff Morgan, Deputy Team Leader for the Bloomberg News Equities team. You're looking at a stock called Waters, Jeff. Thank you very much for joining us. Tell us what they do and what's going on there, please.
Yeah, Waters is a company it's a life sciences company. They sell machines in parts of the science world that I will not claim to understand, but they sell machines to pharmaceutical businesses and others that look very complicated if you see the pictures, and certainly more complicated than I can figure out. However, this is the worst performing stock in the S&P 500 today. That I can figure out. Their first quarter earnings per share looked particularly weak and were below Wall Street expectations. A number of issues here. I suppose the first quarter was really the problem. The high end of their earnings per share range for the first quarter was below the Wall Street expectations. So the high end is missing. The midpoint is therefore missing. Wall Street overall not impressed, and the shares are getting hit today. Yeah, down 10%, 11% just about. In regular trading, it was down as much as 13% in the pre-market session. So this is one that's worth watching today. As I said, don't ask me to explain what the machines do. They look very interesting, but the people that know are not impressed with how many they're selling in the first quarter.
Yeah, I think their product line includes things like spectrometers and chromatography, mass spectrometry, lab informatics. Yeah, but and the website really is not that helpful at first glance.
When I saw the word chromatography, I thought, you know what? I'm not going to pretend like I know what that means.
Kroger, the big grocer, appointing an ex-Walmart executive as its first external CEO.
Yeah, we're going from the bottom to the top of the S&P 500 here. This has been the top performing stock in the pre-market session. It's definitely worth watching over the course of the trading day. As you mentioned, they've picked this new CEO, Greg Ferran. He was most recently the head of Air New Zealand, and then before that, he was an executive at Walmart. The shares are getting a big lift this morning. This is a company that said goodbye to their previous CEO last year over a probe into his personal conduct, and so the company has been without. They've had an interim CEO really since that time. So this stock is moving higher this morning. Wall Street seems to like the fact that they've gone outside of the company, and this, as you mentioned, is the first kind of external, CEO in Kroger's history, and the stock is getting a nice lift so far today, up 6%. That would make it probably the top performing stock in the S&P 500 as of right now.
Jeff, thank you very much indeed. Jeff Morgan of Bloomberg. Bloomberg has this intriguing story today that Newmont, which is a partner with Barrick Mining in the huge gold mining operations in Nevada, is not happy with the way Barrick has been running those operations and says, we want more input into the process before Barrick goes ahead with an initial public offering of part of those massive assets. We're going to have more on that ahead. Barrick Mining does want to spin off part of its massive North American gold assets into an initial public offering later this year. However, Newmont, which is a partner in a joint venture in Nevada, sounds unhappy, according to Bloomberg. They say we want more input, and they're apparently implicitly saying we could block the initial public offering. They're not happy with the way those assets have performed. But there's wheels within wheels here, because there's been speculation that Newmont itself wants to just buy those assets. Let's get more from Dan Rahinton, portfolio manager at IA Global Asset Management. So it sounds like a bit of a frenemy situation. They're partners, but there's some bad blood.
Yeah, you know, joint ventures and minority stakes can do that to friends, if you will. But the best way to think about what's going on is these are all in the context of the interest in gold and precious metals has been very, very, very strong, to say the least. And that remarks up assets. And then when you have safe jurisdiction assets like the assets here would be, this creates that extra urgency on the part of both parties to come to that solution. I would say Barrick has more likely than not the latitude to make these decisions on their own. And this isn't the first time that you've seen some of the seniors like Barrick spin off assets. I'm old enough to remember Barrick Africa, where they spun off those assets.
Oh, yeah.
So there are times where you spin off your EM assets that come at big discounts. There are times when the safety premium is particularly high for durable assets in safe jurisdictions. I think that's what's really going on here, but I would expect some element of this to come through.
Yeah, so there's a 1 year for Barrick stock. Maybe we could put up a 5 year. According to my Bloomberg screen, actually over 5 years, Barrick has been marginally ahead in terms of return over Newmont, but a lot of that is recent gains in the shares.
Yeah, a lot of this is really the precious metals rally, the resiliency of that precious metals rally. And I think that's important when you're looking at miners, Andy. Is it's not just that the metal is up, the metal has to stay up for the investor base, for these companies to come around to the idea that they'll realize these prices. So it's not like in oil and gas where you have hedges or anything like that. If memory serves, we're mostly spot exposed for the whole complex of these companies. But it really comes down to investors need to believe that gold can stay around 5,000, and then they start pricing that in and put that through to the profitability of these companies. So it takes time, which is why the lagged reaction does happen.
Would you be overweighting portfolios in gold right now, Dan?
I'm very cautiously along for the ride, and I'm quick to exit, would be how I'd put it.
Okay.
The reason I say that is when you think about the structure of what's going on, you have geopolitical tensions, you have weak US dollars, you have conversations about central bank independence. I can't think of a better precious metals environment than that, which also means if some of these things start stabilizing a bit, then there's potentially an air pocket down. Please look at silver for reference from a few weeks ago.
Let's have a look at a 1 year or even a 1 month for silver, because that was quite a ride up and well down from its highs.
Yeah, and one more thing to add on that, Andy, if I may, is when you look at what's going on, it's not just that there's real money investors coming in. We live in a very different market structure than years past, where high frequency trading, leverage purchasing, trading bots are very active. So these types of big once in a Six Sigma events that they're known, or Eight Sigma, just deeply unlikely events to happen statistically, they happen because the structure of the market is a lot more algorithmic than it was before. So price chasing can lead to big drops like that.
Because the algorithms, well, one model is they try to jump on a trend.
Exactly. That's right.
And then, of course,
and then when the trend changes,
they'll try to get off.
Exactly.
Yeah. Scramble among the robots. The Prime Minister of Japan winning a landslide victory. She has plans for massive spending. What's that mean for global markets? What does that mean for Canadian investors?
Yeah, and I think the gold and precious metals is really how, and energy as well, indirectly. That's how these global trends tend to impact the Canadian stock markets. But I'll speak to just what's been going on in Japan. Japan is going through a big change in its structure when it comes to how it handles geopolitics, the history of pacifism, being more hawkish towards China. Along with this victory came the idea of a significantly greater military buildup in Japan. So that is very much on the cards now. So, and a lot more directly facing up to China in those contested areas. And on top of that, a domestic policy that's far more, call it fiscal stimulus oriented than generations past. So that creates an awkward tension with the Central Bank of Japan, along with how the actual fiscal environment in Japan proper is going to go. So a lot of what you talk about in the US, in terms of just what we're seeing spending-wise and the relationship with the Federal Reserve, Just copy and paste that over to Japan, Andy, because I think that's increasingly where we're going. And that's why these conversations about precious metals that we just had, also, that's how it filters into the Canadian economy.
Sorry, give us that again. So a radical uncertainty over the direction of Japan?
And inflation, less focus on inflation, more fiscal stimulus. That's part of the reason why gold has been so aggressively bid as well.
Yeah.
So Japan is very significant as a capital pool because Japan was a big savings economy, huge export economy, which means you have a lot of dollars that you send back and flush into the global economy. You buy treasuries, you do foreign aid, things like that. All of that, when your local Japanese government bonds are going up in yield, those Japanese pension plans, those investment funds, don't need to go out to the world for 4% if you can get it right there in the JGB market. So that drains capital out of the system globally and brings it more locally. I know that's a lot of balance of payments, mumbo jumbo, but what I'm really trying to say is Japan has an outsized role in the global economy outside of just export. It's because the money, it's the world's banker in some ways too.
Yeah, and also people have borrowed traditionally in Japan at super low interest rates and bought houses, for example, in Eastern Europe.
Yeah, that was known as the JGB carry trade. Yeah. And that's kind of inverted now too.
What about the Fed? I know we go on and on about it, but is there one thing we should remember about the new guy there, Kevin Warsh?
Yeah, most likely the new guy by the looks of it.
Okay.
And
yeah,
the way
if he gets confirmed. Yeah, sorry.
Yeah, of course. And when I think about just the bugaboo that's being made a little bit about the 1951 Accord, stepping away from the separation of, call it church and state, which was the Treasury and the central bank, that era of independence post-World War II. I think Kevin Warsh, I would give a little bit of credit where credit is due. He's criticized that hasn't been the case for a while, and I think there's some truth to it. So if you go to any periods of crisis like 08, 09, if you look at Timothy Geithner, Hank Paulson, and Ben Bernanke, you'd be hard-pressed to tell that there was separation of church and state there.
There wasn't much daylight between them, I seem to remember. Yeah.
And if you take what happened actually with Silicon Valley Bank, Andy, the same dynamic. So I think the blurring of the lines between the Federal Reserve and the actual U.S. government proper itself, the Treasury Department,
isn't that interesting?
is graying already. And I think this is just going to move further down that road. I'm not sure yet that that's a good thing or a bad thing. I'm inclined to say it's probably not great, but it's too early to say. And the continuum with which we started in 08, 09, through COVID, through the banking crisis to where we are today, I think you can draw a clear line from there.
Before we let you go, you are a long-time observer of the auto industry. And I was amazed. I actually had no idea that 3/4 of the cars made in Canada last year were made by those two Japanese manufacturers, Toyota and Honda. So we've already had, we have had a major retreat from the US market by the US automakers.
Yeah, and the way to think about automobiles as a whole is what's going on. And a lot of this is we don't actually invest in these companies, but growing up in Whitby, Oshawa, it's so close to home that you can't help but follow. The nature of the combustion engine, the nature of autonomous driving, all of those trends are really coming to a head where we sit today. So we are moving from a car ownership world to something that resembles a lot closer to Uber, a few AI models from now, where machine vision is good enough that a few hundred Waymos can already accommodate 10% of the traffic in a minor city in the United States. So just imagine playing that forward a few years.
Car ownership starts dropping.
Yeah, car ownership and the need to do so. It's just cheaper to get in an autonomous vehicle as we move forward. So I think these companies, they've taken, I'd call it the hybrid approach by doing hybrids. But the world of EVs plus autonomous driving, I think, is coming a lot closer to today.
And can Canada really be a player in the global auto market?
The tough part about that conversation is it's probably not, because we lack what's known as network effects in an industry, right? So there's a reason why Silicon Valley became what it was. It was Fairchild Semiconductor, then came some other firms, and then finally came the internet boom that led to where the modern Silicon Valley is today. So there's a continuum. China has invested hundreds and hundreds of billions of dollars in building a big, deep ecosystem of automotive. And it's at a scale where it's cheaper to export on a ship than it is to build locally.
I'd love to have you back. Always love hearing from you, Dan.
Good to see
Thanks
you.
very much indeed. Dan Rahinton, Portfolio Manager at IA Global Asset Management. Just ahead, a new poll points to independence among Albertans sitting below 30%. And when a few more questions are asked, support apparently drops much lower. That's ahead. A new Angus Reid poll on Alberta's separation indicates that despite a lot of noise by people who would like to see Alberta leave Canada, the vast majority of people in the province want to stay. Let's get more from CTV's Judy Trin. So, Judy, from this poll, not much momentum for separatism right now.
What it shows, Andrew, is that support for Alberta separation is wishy-washy and less than 30%. But what this is driving all this talk right now is we've seen video of long lineups of people in Alberta waiting to sign a petition for separation. We've had reporting of this group, the Alberta Prosperity Project, these leaders pushing for separation, meeting with members of the Trump administration. So that's driving this news coverage right now. But support is actually not as strong as they would like you to believe. So take a look at these figures that we're getting from Angus Reid. So what we are seeing, according to this new survey by the pollster, is that of the 29% of Albertans who support separation, only 8% say they are definitely on board. Another 21% would lean that way. But overwhelmingly, the majority of Albertans want to stay in Canada. 65% say they would vote to stay, with the majority of that group saying they are definite in their support. Andrew.
Looks as though they didn't ask about the possibility of Alberta joining America, but let's not open that kettle of croissants. Judy Trin, what were some other big takeaways here, please?
What's interesting, Andrew, is that in regards to this survey, it also asked about whether or not Albertans agree with how Danielle Smith, the Premier, has handled this referendum issue. And the overwhelming majority, more than 54%, say they don't agree with what she's done. She's kind of said, basically, that she supports a sovereign Alberta in a united Canada. What does that mean exactly, Andrew, right? When she's laying down the mechanism basically for Alberta to separate. But when Angus Reid, the pollsters go dig even a little bit deeper, what they show also is that if a referendum was held today and it proved to be successful and Alberta would separate, 74% of Albertans would move to another province. And only 23% would choose to stay. And in regards to your question about the U.S., only 3% would choose to move outside of Canada. So there you have it. Now, the Angus Reid survey, Andrew, also shows where people are getting their information. And there is a divide between the people who want to stay in Canada. Those Albertans are overwhelmingly getting their information from mainstream media. The individuals who want to separate, that 29%, they are getting their information from alternative news sources. Andrew.
That's, of course, a sign of the times. It used to be that we would all watch the same news and read the same papers. Of course, we'd like to have our biases confirmed, but now we have this more divided world. Judy, thank you very much.
It is an echo chamber.
That's
You're
the word.
welcome.
That's the word. Judy, thank you very much. Judy Trin of CTV News. Okay, let's have a quick look at a NASDAQ 1 week chart because it was choppy last week. And we're down about 2% over the past 5 trading days. We're going to have more on that sell-off ahead. Tech stocks have had a wobbly start to the year. We've seen selling in particular in software names. Tech bulls are under pressure to identify companies that will best weather the storm. Let's get more from BNN Bloomberg contributor John Ehrlichman. John, what are the tech bulls saying right now?
Well, I think it's interesting. You've got a mix of the mega bulls who are being asked to reassess their lists of stocks that they were very bullish on just a few weeks ago, and answering the question, do you still feel bullish now? But I think the strategists are also interesting. They have these thankless jobs, Andy. Of course, they get paid a lot of money, so the stress they feel perhaps warranted by their paychecks. But Mike Wilson of Morgan Stanley had a note to clients today, which I thought was interesting, where he very simply said, look, at the end of the day, AI is a tailwind for the economy when you measure the productiveness, the sales potential that comes from it. So it will still be a tailwind for big tech, even if people are worried about how much these companies are spending, which they're spending a lot. We know that. So as an example, he says, look, big tech have a lot of levers they can pull. The US dollar's been weaker. That could benefit their businesses. The AI story, ultimately, they think is a tailwind. And then on the software names that have really struggled, because there's this narrative that AI is just going to crush traditional software businesses, the Morgan Stanley research team has said, we think that these companies still have a very attractive business, and the valuations are more compelling now. So I think you're going to see a lot of this back and forth, especially to your point, if the wobbliness of tech continues in the next few weeks.
What names are cropping up here, John?
So I think in the case of Morgan Stanley, their team on software looked at a whole bunch of different companies, but Microsoft, Salesforce, these are companies that have massive enterprise businesses, and the general math is that that business isn't all going to go away. I'll add that Dan Ives of Wedbush singled out those two companies last week when he was talking about, in his opinion, some must-own names in software. And obviously, in reaction to some of the guidance, like AMD is a good example of a stock that just got walloped. Kathy Wood, a longtime investor, bought the dip. So we'll see what the bulls continue to do.
Thank you very much, John. John Ehrlichman, BNN Bloomberg contributor, and he also hosts the Ticker Take investing channel on YouTube. When we come back, the latest business headlines, and we'll update you on those markets. Welcome to the second hour of The Open. Let's get to the big stories we're bringing you from our newsroom. Newmont Corporation wants Barrick Mining to improve its U.S. operations before spinning off U.S. assets and also a mine in the Dominican Republic in an initial public offering. That's according to Bloomberg. Newmont apparently believes it has the power to potentially block the IPO. Barrick announced last week that it does plan to spin off those North American gold assets into a publicly traded company. As a reminder, it will include that stake in the huge operation in the Dominican Republic, as well as its joint venture in Nevada with Newmont. Newmont has been ramping up pressure on Barrick after a string of operational setbacks. Shares in Cleveland-Cliffs are taking a hit today. The steel maker reported lower fourth quarter revenue as well as profit that missed estimates. Cleveland-Cliffs says that 2025 was weighed down by weak production from the automotive industry as well as a weak Canadian market. The steel maker shipped 3.8 million tons of steel during its latest quarter, roughly flat versus a year ago. It does say that things are improving for 2026 so far, and the U.S. trade environment should set the stage for dramatically improved results this year. But of course, President Trump's aggressive protectionism was supposed to boost the U.S. steel industry. Shares in Eli Lilly edging up 1% after the pharma giant said it's buying an outfit called Biotech Orna Therapeutics for up to $2.4 billion US in cash. The deal is aimed at expanding Eli Lilly's pipeline of drugs beyond its popular obesity lineup. Orna is developing a new class of treatments for certain autoimmune diseases. And there's a look at the TSX, down a little bit today. Two stocks I saw hitting record highs were BMO. So investors are buying into the Canadian banks right now, and also CIBC. Both of those names hitting new highs, and of course, the banks generate. Oh, Bank of Nova Scotia. I don't know if it's at a record, but Scotiabank is at its highest in at least a year. So investors moving into those big Canadian lenders. Yeah, I don't think Royal Bank is quite at a record high, and TD Bank hitting its highest in at least a year. A quick look at the US markets. Let's see how they're faring as investors continuously reevaluate their investments in software companies that even a year ago were seen as pretty sure bets, names like Salesforce. Right now, NVIDIA is ahead, massive trading as usual, up 4%. Amazon.com is down. Micron slipping, but that stock has been a rocket ship amid shortages of memory devices. We did see gold go above $5,000 US an ounce again, with dip buyers returning to a choppy market. Let's get more on the latest performance for bullion from Rebecca Telcher, portfolio manager at New Haven Asset Management. Rebecca, great to see you, and thanks for joining us.
Thanks for having me.
I mean, the proverbial roller coaster, gold, a lot of money, I guess you could say a lot of money has gone into gold, and perhaps buyers are scarcer now.
Yeah, you know, it's so funny. I was on vacation last week in Mexico, and I had very spotty internet, so I wasn't, as up to date with the markets. And wow, what a week to miss, right? What we saw in, commodity prices, whether it was gold, silver, the markets. I mean, we saw a lot of volatility, particularly in the metals, and that translated to the TSX. And now, we're seeing a little bit of a reversal of that as gold, goes back above $5,000 after, dipping below that last week.
Mm-hmm.
At the end of the day, gold is, a neutral asset. And what we're seeing is as investors are taking money away from risky assets, whether that's going to be the tech sector, which we saw last week, whether that's going to be Bitcoin, that's down 20% just year to date, and whether that's going to be away from the US dollar or treasuries. They are searching for a safe haven. And right now, gold is one of the only areas that's providing that right now.
Of course, gold highly volatile itself, though. I mean, I guess there's no safe haven in investing ultimately. Maybe government bonds come close.
Well, the thing is, government bonds used to be a safe haven, but, as we're seeing all these government shutdowns, as we're seeing, debt levels climb to record highs with U.S. deficits, not coming down. I think we saw that at least last year, the spread between corporate bonds narrowed, not because corporate bonds were trading at, a discount, meaning that the economy is okay, but it was the opposite. We saw, a premium for the yield, like the yields of government bonds going up because investors were worried that the U.S. won't be able to pay back their debt. So as you say, there is no risk-free asset anymore. And with interest rates coming down, I think that's, creating more of an opportunity for places like gold.
Those tech stocks, I'm just looking at the list of big stocks in America hitting 52-week lows this morning. Adobe did its lowest in at least a year. Salesforce and ServiceNow. So those three names, classic software names, all under pressure again, certainly in early trading.
Yeah, I mean, software has its own issue with the idea that, AI can take over some of their business. But even with the large hyperscalers, like what we've seen with the Magnificent Seven, those stocks really outperformed in the past, for the past 2 years. I mean, since the introduction of ChatGPT. And, it's a new technology. I get it. It was really exciting. I do think AI is here to stay. I'm not questioning that. But now the question is, okay, we've seen now several years of what AI can do, but how is that going to translate into revenue? And so, what we saw last week with earnings is, Amazon is spending $200 billion in CapEx, in 2026. Google's spending 175, Meta's spending 115 billions of dollars. I mean, these companies that were asset light are now becoming very asset heavy. And, we don't invest in that sector because it's a little bit too risky for us. Valuations are too high. There's no dividend yield, to support the stock price. But if I was an investor in those stocks, I would absolutely be concerned at how much money is going into the sector without any indication of how this is going to translate into revenues or income growth.
Yeah, it's interesting. I mean, you're calling it a race to the bottom. It's kind of a mirror image of a race to the top, isn't it? I mean, they are spending more and more. And I am curious. I mean, $200 billion by Amazon. So they're obviously thinking, well, we'll earn $200 billion in profits here. But from what? Who's going to pay them $200 billion in earnings? I mean, consumers are going to pay.
And that's why we're seeing Amazon stock really under pressure. I don't think investors are necessarily buying it. Google's a little bit odd because they're, spending almost as much as Amazon, but they seem to be getting like a free pass with the market. Like they haven't seen the same share price weakness that Amazon has, and perhaps they're showing more of a translation into revenues from that CapEx spend. So I think right now, whereas in 2023, 2024, any company that was investing in AI was, receiving a very high trading multiple. I think now we're seeing not necessarily reversal, but I think, when you're trading at a very high premium or a very high multiple, you're priced to perfection. So you better deliver perfection. And I think what we're seeing is if you're not, or if investors are questioning where all this CapEx is going, you're going to start seeing some weakness. So I think, 2026, I think investors are looking under the microscope. They are paying more attention to where this money is going and if that's actually going to translate into growth.
That's interesting. I'm not sure if you saw that Anthropic, the AI provider, says we're not going to be putting ads into the answers that we provide people. ChatGPT, Sam Altman is upset about that because it looks like ChatGPT would like to bombard us with ads.
Right. And this brings up another point. There are many different AI tools right now. At the end of the day, in 5 to 10 years from now, how many AI bots do we actually need? Yeah. I mean, I think we saw it 20 years ago. Did we actually need more than one search engine? Did we need Yahoo and did we need Google? No, probably one search engine is enough. And so similar to AI, how many do we need? Google's and AI and OpenAI and Anthropic? How many different AI tools do we actually need, or do we really need to consolidate under one? And if that's the case, then all this CapEx could be for nothing.
Yeah, that's interesting. Yeah, I guess specialists will always have their special type of AI, but you and I maybe not. Yeah, that's
exactly.
Interesting. Yeah.
And so, like I say, AI is here to stay. I'm not questioning that. I think we see it's a powerful tool.
Sure.
But for us, for our investors, it's just not a risk we're willing to take because I do think it's still early on. We're seeing lots of capital going into this sector with with a lot of questionable results right now. And maybe eventually this will be a good sector to lead to. But right now, without any dividend growth, with high multiples, it's just too risky of a sector for us to go into right now.
Thanks very much indeed, Rebecca. Rebecca Telshire of New Haven Asset Management. Coming up, Canada is scrambling to rearm. There is a defence tech gold rush. But what about Ottawa's notorious bureaucrats? We'll be right back. Prime Minister is promising the largest military build-up in decades. The plan is that Canada will spend more than $82 billion over 5 years investing in defence. And the plan is to unveil a defence industrial strategy soon. We are joined by Bloomberg Ottawa Bureau Chief Laura Dillon-Kane. Laura, thanks very much indeed. And you guys say there's a defence gold rush going on right now. Companies hoping to get in on this.
That's right. I mean, you mentioned the $82 billion in new defense spending over the next 5 years, but Carney's committed to 5% of Canada's GDP on defense spending and related infrastructure by 2035. So that could mean hundreds of billions of dollars. It could mean a lot more money than that. And so defense firms and dual use firms making technology that can be used for the military or civilian use are really gearing up to get a piece of this cash. But they do warn that the biggest barrier preventing these smaller and medium-sized firms from scaling up is Ottawa's notoriously slow procurement system.
Yeah, it's not unique to Canada. Apparently the Brits have this problem as well. I do remember one Canadian defence entrepreneur saying he just couldn't get the attention of the Department of Defence. He couldn't find anyone to talk to.
That's right. I mean, that has been the case now for decades. I spoke with the Business Development Bank of Canada CEO Isabelle Houdon, and she talked about how it just wasn't seen as a strategic sector for Canada in recent decades. I mean, really until sort of the turn of last year, when the US administration started behaving in more of a hostile way toward Canada, and it became clear that it was pulling back from traditional security relationships, did this sector become a huge priority for the government. And so that's been transformational. You know, there used to be many clauses, sort of exclusionary clauses in fund documents for the BDC, for pension funds and banks that they're now looking at removing in order to allow investors to back defense firms more directly. So there's a lot of capital that's sort of ready to be unleashed. And it's starting to trickle out, but what the government really needs to do now is speed up that pace of procurement, especially for deals under $100 million, where Canadian firms can really scale up and thrive.
Yeah, the bureaucrats, of course, they always want, we better take another meeting on that. Yeah. Apparently Winston Churchill in the war said, I don't want memos from you guys saying on the one hand, on the other. I just want you to tell me what you think we should do. Anyway, thanks very much, Laura. Laura Dillon-Kane, Ottawa Bureau Chief for Bloomberg. Right, we've got more on Canada's new automotive sector strategy. We'll get perspective from a trade lawyer. Last week, the Prime Minister launched a new strategy to transform Canada's auto industry. It's an effort to protect and foster the sector in Canada while diversifying away from absolute dependence on the US. We were joined by Derek Young, law partner at Gowling, to discuss the move, which of course touches on sales quotas and emission reduction targets, and how this is likely to affect the automakers, all of them foreign, that produce vehicles in this country.
I think we should see it as part of a broader strategy. It does make sense, but I think we are still very much at the early stages. So really, I think until we see the details, it is something that's worthy of keeping an eye on.
Okay, so is the idea, though, to open the door to other models being included in emissions reductions, which aren't included now? Is that sort of the broader idea here?
I think the broader idea is to incentivize production in Canada. And what we could see from just all of these initiatives is the desire to allow greater access to the market, but as part of that deal, the need for them to also, for international players to also invest in Canadian infrastructure and production. So it is a very much, I think, a carrot approach where partners are incentivized to also contribute to the growth of the industry within Canada.
Okay, so right now there's already a emissions framework. Companies can import from the U.S., for example, but aren't being hit by the tariffs from Canada when they do that. Has this policy worked for car makers so far?
I think it's historically, and then I think we should approach this in terms of looking at broad strategies. it hasn't been implemented in a more coordinated fashion, whereas what we're seeing now under the current Liberal government is more of a strategy where everything is really a piece of a larger game plan to build two things. I think two things that we are focused on is diversity and also resilience. Diversity in the sense that maybe a broader supplier base, and also in terms of international customers for Canadian products, and in terms of resilience through cooperation with international partners, maybe having much of the Canadian manufacturing infrastructure improved and upgraded so that they are more competitive internationally, particularly in the EV sphere.
Okay, so what did you hear in the announcement yesterday that would work, as you mentioned, as a carrot towards that?
All right, it's incentivization. So the import permits under the new proposal seem to be tied directly to the extent to which foreign companies are able to invest in Canadian manufacturing. So historically, we are closely tied to the U.S., and that may very well still be the case. But there is now an increased incentive for I guess, exporters or importers into Canada that if they want to play in this space or they want to partake in the growth that's in the Canadian sector, they have to contribute and help build the domestic manufacturing. So the best way to do that, and that's what seemingly is the approach, is to allow for import volumes to be tied directly to the amount of investment in Canadian industry.
Yeah, so what they're looking at, and this is not something that they are moving forward with yet, they're in consultation, is an import credit, essentially. If you invest more in Canada, you rack up a certain amount of credit that eventually will mean cash for you.
Correct, and it's a tradable credit. So again, at this stage, and we have to be very careful about this, it is a proposal, but what is likely going to flow from it, if it's implemented, is the idea that the more you invest in Canada, the more credits that you receive in terms of being able to import into Canada as well. So it's directly linked. It is very much a positive reinforcement exercise. So this is really, I guess, a counterpoint to the other approach, which is the stick approach of just imposing tariffs, restricting imports. This is the exact opposite, where you're saying, look, we want you in this space, but it has to be worthwhile for all parties involved.
Yeah, the U.S., Washington has a very aggressive policy, do it or else. And I'm wondering how Canada's policy stacks up, meaning would it benefit companies to stay in Canada with these carrots, or is the U.S. has just such a big stick, what does it matter and really not amount to much considering the strength and just the size of the U.S. market?
Well, that's a really good question. I think what we need to be cognizant of is the strategy that's being proposed is not unique to Canada. The U.S. themselves actually have adopted a very similar strategy. So U.S. automotive manufacturers are increasingly looking to work with partners abroad to build up their EV manufacturing capacity and capabilities. So to answer your question, really, this may very well be an exercise where we speak of Canadian manufacturers, but many of our Canadian manufacturers being historically tied to the U.S., they are also benefiting from this arrangement. So it is conceivable that for many, even for many of our American partners, they benefit from these policies that are being implemented or being proposed for Canada.
Is Canada a better jurisdiction for them to do business, considering the volatility of the U.S.?
Better jurisdiction for whom?
For companies, for example, Japan or Korea, who are making cars and want to make them or are already making them in Canada. Is there an incentive to stay here because it provides perhaps more stability than the U.S.? Is that an incentive for them?
I think historically Canada has been a very stable jurisdiction in terms of policy and regulatory environment. What we need to keep in mind, however, is that relative to the U.S., Canada is a relatively small market. So it may be, there is more certainty, I think, in terms of operating within Canada. But in terms of volume, obviously the U.S. is still the bigger prize. So in that sense, I think it is very attractive for foreign companies to be here. But we should compare ourselves perhaps to middle powers or other EU economies that have similar customer base or similar size markets. The U.S. is roughly 10 times the size of Canada. So it's not a apple-to-apple comparison, but I do agree that there is absolutely incentive to be in Canada simply because of the regulatory and policy stability.
I said there were no Canadian automakers. There is Mighty Truck in BC. It makes some pretty cool-looking mid-sized electric cargo vehicles. Teradyne makes armored vehicles and vehicles for cops, but mass-market cars, nope, we're a branch plant economy. Derek Young, a law partner at Gowling. Coming up, the EU is warning Meta to open up its WhatsApp application to rival AI chatbots. That's after 2 antitrust investigations. Take a closer look at the power of big tech firms. Welcome back to The Open. Thanks very much for joining us on this Monday morning. There is bad blood, or at least a dispute, between Newmont Corporation, which is partner with Barrick Mining in a giant Nevada joint venture. Apparently, Newmont wants Barrick to improve operations before spinning off its North American mines. According to Bloomberg, Newmont believes it has the power to potentially block an initial public offering. Barrick announced plans last week to spin off those assets in a publicly traded company. They'd also include its interest in a Dominican Republic mine, but also the flagship Nevada joint venture. Newmont has been ramping up pressure on Barrick after a string of operational setbacks. Clothing retailer Eddie Bauer has filed for bankruptcy with plans to sell as many of its stores across Canada and the US as possible and liquidate the rest. The brick and mortar chain listed more than $1 billion in debt, and the move marks the 3rd time the company has filed for bankruptcy. Eddie Bauer's e-commerce and wholesale operations, as well as its retail stores outside North America, will not be affected by the wind-down. Shares in Apollo Global up about 3%. That private equity giant drew in nearly $30 billion US of positive cash flow during the final 3 months of last year, pushing its assets under management to a new high. The firm beat on profit and revenue, with revenue surging 85%. Apollo had a record quarter for deployment of capital, which helped lift management fees that it charges on its funds. And you can see North American stocks up. According to the big indices, we did get a slightly weaker open for U.S. stocks this morning after a choppy week last week. But it looks as though the strong picture for corporate profits and the ongoing expectation that lower interest rates are coming, encouraging investors. We're waiting for numbers this week, including the January jobs report. And the prediction here is that U.S. unemployment rate will hold steady at 4.4%. Meta has been given a warning by the European Union over policies that block the use of rival artificial intelligence assistants on WhatsApp. And of course, this raises the possibility of further tensions with the administration of US President Donald Trump over the regulation of American tech companies. Let's get more on this. Bloomberg's Francine Lacqua spoke with the European Competition Commissioner, Teresa Ribera, on the Pulse. Let's take a listen.
Well, I think that it is very obvious that we need to defend and to implement, to enforce our rules, to defend the market, a well-functioning market, a competitive market, where there can be an option for players to provide their offers and for consumers to decide which option they prefer. So the abuse of a dominant position in a given market that prevents any other alternative for final users is not good news for anyone. And it is not good news in Europe. It is not good news in the United States. And in this case, we are worried because we sense that this may be the case when forbidding the access of other providers of AI instruments that use WhatsApp. So this is the message that we wanted to send to Meta. Why we do not start thinking of an interim measure, preventing this stop of available options.
Yeah. Commissioner, when you're saying that Meta risks a temporary European Union ban, how do you think the U.S. will react to it?
I think that for anyone being at the forefront of any institution, we respect the enforcement of the law. So I don't know how it may be read by any government, but my sense is that this is not connected to politics, but connected to well-functioning markets and protection of consumers.
I'm not sure the Trump administration will view it necessarily in exactly the same way, but I want to ask you a more broad question about AI and regulation. Obviously, this is a technology that will disrupt the world in a number of different ways. It's a new sort of area of functioning. Are we going to see more cases like what we're seeing against Meta, against other technology firms? And what kind of concerns are you seeing in terms of concentration and antitrust in the world of AI more broadly?
We are not looking into the origin or the headquarters of any given company. In this announcement that we have made today, these interim measures, Italy has already taken a similar approach. We are opening a procedure so that if Meta does not agree, they can defend, they can take whatever information they bring to the table to respond to our question, and it is not a final decision. I think that AI is changing the world. We all, consumers, citizens, providers of public services, providers of private services, industrials, rely very much on the quick development of digital services and AI. And I think that it is good that there can be many players that could challenge the traditional incumbents. So it's good to be successful, and it is also important to ensure that those looking into the future are not prevented to develop their services because of those that have succeeded in the past. Great to compete, great to have these open markets for everybody.
And in another area that's not quite as new as AI, but still relatively new, is this world of streaming. And we now have this sort of potential acquisition by Netflix of Warner Brothers. This is something that certainly will attract some scrutiny from you. In a sort of preliminary fashion, what kind of concentration risk do you see from those deals? Do you see one of the two offers as more risky? And have you had any contact with any of the CEOs involved?
No, we haven't got any contact, and of course it is quite clear that this is something which is not quite clear yet what it is going to happen. So we follow what it is going on, and we will be paying attention to whatever operation, consolidation, acquisition may take place. For the time being, it is not clear. So the bids are there, the discussions are there. We will have an eye on what it could mean for the European markets, as it is the case in the United States. But there is no operation to be assessed yet now. Not yet, sorry.
Commissioner, could you talk to us also a little bit about Google? So what's your vision for how Google should operate in the EU? And could you ever see a Google that's actually different in the EU than it is to the US?
I think that Google is quite a relevant player, both in the United States and the European Union. And I think that in certain markets, in certain services, they have a very relevant position. In others, they are not the front runners. There are others that have taken a higher share of the market. And I think that it is quite important to remind ourselves that we came up with a regulation to introduce predictability on what it is the expectations in terms of the obligations and the rights in an upfront manner, so that any gatekeeper, anyone having a relevant position in a given market could know upfront what it could mean to ensure that users are protected.
Since the last time you spoke to Bloomberg, has your thinking about Google's ad tech changed at all?
Sorry, that I didn't get your question.
what's next for Google? Is there anything in terms of ad tech or something else that you don't like when you look at Google?
Oh yes. Sorry. I hadn't heard that. No, I think that that is where we are right now, and I know that Google is making effort and having conversations with the services, so to ensure that this very important flourishing business case in terms of advertising through the different technological platforms are not restricted or is being biased by any given preference towards Google's decisions, toward Google's priorities or preferences. And the efforts are ongoing. So we have paid attention to the decisions being made in the United States, including by the courts, and I think that it is good that we go along similar lines in the different jurisdictions. But the process is not yet over. So we will be coming up once we have a clear understanding on how far we can ensure that the final solution is equal, inclusive, and does not discriminate competitors.
That is European Union Competition Commissioner Teresa Ribera talking to our Bloomberg partners. Coming up, hot picks. We're zeroing in on aerospace and defense. It's time for hot picks in aerospace and defense. That's on the menu today. Our guest has ITT as her top selection. She thinks this company will gain from its acquisition of an equipment maker called SPX Flow. We're joined by Evelyn Chow, Portfolio Manager at Neuberger Berman. Thank you very much indeed for joining us, Evelyn.
Thank you, Andrew. It's great to be here. In this really volatile time where we've seen drawdowns in TMT, a lot of macro cross currents, I think one area that really stands out to me as a global equity PM is, in fact, industrials, and specifically aerospace and defense. So you might be surprised to know over the last 12 months, industrials has actually outperformed the XLI by over 1,000 bips. And that's been due to a confluence of factors, including better than expected top line growth, a really, really capable navigation of the tariff environment, a broadening of the cyclical recovery trade, and last but not least, extremely tight supply and demand dynamics, especially within commercial aerospace.
Can I cut you off? Sorry, Evelyn, I wanted to cut you off there because I got confused by something you said. XLI is an ETF that tracks industrial stocks in the United States. That's what you mean? And
that's exactly right.
And sorry, what did you say about the performance of it?
It has outperformed the S&P by over 1,000 bips in the last 12 months.
Thank you. Sorry to cut you off there, Evelyn. We're tight for time, and I'm cutting you off again. Could you tell us about ITT, please? What do they do? What attracts you to that stock?
Yeah, ITT is not a household name, but it is a core portfolio holding. This is a mid-cap compounder, dominant in industrial pumps, aerospace connectors, and defense electronics. I see a mid-teens earnings algorithm over the next few years, both on the back of their organic upside surprise, but also, as you noted, Andrew, due to their impending acquisition of SPX Flow, which will make them a dominant player in the flow control and process markets.
And tell us about, how much of their business would be defense then? Is it fair to call it a defense stock?
I would say aerospace and defense probably makes up somewhere around 10 to 15% of current revenue base, but accelerating at a very high level. They're levered to the wide-body OE recovery as well as defense spending accelerating, not just in the U.S., but all around the world.
A better name in defense, Boeing, of course, a huge civil business, but tell us about their defense franchise and what attracts you to the name, or is it just the broad aerospace component here?
Yeah, I really think it's both, Andrew. So, you correctly noted Boeing has a great defense business. Boeing Defense has actually seen a great step down in the amount of charges it's taken over the last few years. That's a business that we expect to be well on the path to break even and eventually even better margins over time. I would say the call on Boeing really stems from the fact that post-COVID, we are still seeing that original equipment recovery. You know, a lot of planes are in backlog but still need to be delivered. I think Boeing is, finally reaching cruising altitude. A few key numbers to frame that. I think we should think about $13 billion of free cash flow within 3 years, $15 billion of free cash flow within 5 years. That's off of around low single-digit billion free cash flow today. And so I really see this great acceleration in the free cash flow ramp of this company, stemming not just from its position in defense, but also its position in commercial OE as well as services.
And then finally, a name that is huge in defense, Lockheed Martin. What would be your bull case on this stock?
Absolutely. I would say defense primes are ready for prime time. Defense spending accelerates not just because of geopolitical conflict. I think there's a recognition that we are entering really a new paradigm of deterrence. You see that reflected in the fact that we're talking about a $1.5 trillion budget in the U.S. Over in Japan, we just saw a landslide supermajority victory for the LDP, a party where the PM is very, very supportive of accelerating defense spend as well. And that doesn't even capture what's beginning to happen with NATO countries, especially Germany and Poland, that are really ramping their defense spending. I would say Lockheed represents a bellwether that had a few missteps over the course of 2025, but I really think this is the year where Lockheed is regaining its mojo. I see upside revision to numbers, backstopped by a very, very strong franchise in missile interceptor demand. You've seen a couple of framework agreements from the U.S. government to accelerate production capacity in that area, and I think Lockheed is poised to benefit in a really material way.
It's interesting, yeah. Just looking at their website, and they highlight the anti-missile missiles, but also unmanned or automatic autonomous maritime vehicles as well, ships that just sail under their own. Some of them have sails, it looks like.
It's a whole new world, Andrew, and I think you see the primes really investing in a lot of innovation in this area, really as a reflection of the fact that defense tech is becoming much broader, much more sophisticated. These are much more elegant solutions to deterrence than we've ever seen before.
It's interesting, isn't it, finally, that just the Ukraine war, tragic as it is, we've seen the emergence of relatively cheap drones as an important weapon on the battlefield.
Absolutely. I think unmanned and autonomous represents a really, really critical area of investment, not just for the U.S., but for the whole world. That will still be complemented by the fact that we will need very complex systems that are manned in order to mount a sufficient defense in all theaters of potential deterrence in wartime.
Thank you very much. Really appreciate it, Evelyn. Evelyn Chow, Portfolio Manager at Neuberger Berman. Coming up, Newmont calling on Barrick to do a repair job at their giant joint venture mining operation in Nevada before Barrick pushes ahead with an initial public offering of the mines. We'll have more after the break. Let's just take a quick look at Vizsla Silver here, VZLA, I believe, in Toronto. Just a horrible story. The company says some of the people who were taken from their Panuco asset in Sinaloa State last month have been found dead. That's according to family members' accounts to the company. It's awaiting confirmation from the authorities. Our focus is on the safe recovery of those who remain missing. Vizsla did say in January 10 people were kidnapped or seized at that project located in the city of Concordia in Sinaloa, Mexico. So horrible situation, tragic. Let's have a look at the TSX now. We did see strength today in some of the big banks, CIBC trading in record territory. Power Corp trading in record territory. I'm sorry. No, I'm not sure about Power Corp, but certainly CIBC hitting a new record high in trading today. We saw investors bidding Bank of Montreal to a record high. Bank of Nova Scotia, I forgot to check whether it's a record high, but it's certainly the highest in at least a year. And here's a name that's interesting, Synovus hitting its highest in at least a year. And EQB, maybe we could pull up a 5-year chart for EQB, because that company, of course, has struck a deal with PC Financial. That was a while ago, that is seen as providing a whole bunch of new business. And that stock trading in record territory as far as I can see right now. Let's have a look now at the US markets. They did start off weak, but now pointing up. And trading in the US market as usual, NVIDIA near the top. Quite the sell-off right now in that company, Hims and Hers Health. That's a telehealth company, and they've been marketing cheap versions of semaglutide, GLP-1 drugs, and apparently the Novo Nordisk is going after them in court, complaining that their patent has been violated. And apparently the regulators are sniffing around these so-called compounded GLP-1 drugs. You can see that stock down 60% in the past year. Let's have a quick look at Barrick now, because an intriguing story that Newmont, Bloomberg saying that Newmont is not happy with the quality of those Nevada operations that Barrick would like to spin off in an initial public offering. Let's get more on that story. We are joined by our Bloomberg partners now. Thank you very much indeed for joining us. Sibylla Gross. Great to see you again, Sibylla. Intriguing story, I guess maneuvering behind the scenes here as well.
Yeah, a little bit. You know, we haven't really had much out of Barrick in terms of what this IPO is really going to look like. So I think like the context to this announcement that we've seen from Newmont this morning is to do with the fact that they're basically reminding Barrick of their contractual obligations in terms of the joint venture agreement that they have in Nevada. We don't have details again about what sort of Barrick is planning on doing in terms of like the size of the stake it's planning to sell. It did sort of, executives on the investor call last week sort of ballparked 10 to 15%. But Newmont's here and they've got a stake in this project. And I guess what they're trying to reinforce to Barrick here is that they want to see improved performance at the Nevada project because we've been seeing like declining production for several years out of that project. And it really is the core asset in that suite of North American assets that Barrick owns.
So Newmont, as you know, is widely expected to be a possible buyer of that public company or those assets. So I don't know, maybe it just doesn't fit their game plan to have it trade as an IPO, maybe at a higher valuation. I don't know. Maybe they would prefer just to buy it directly from Barrick.
Yeah, that's what Bloomberg has reported. Last year, my colleagues said that Newmont was interested in NGM and not so much the other assets. So the focus on today on NGM, it makes quite a lot of sense for them. It remains to be seen what Barrick can do or what they will do next in this situation. Obviously, Newmont's reminding them today that they do have certain contractual obligations in terms of needing Newmont's consent in certain transfer scenarios. But you know, whether Barrick really wants to sort of work quite closely with Newmont on this remains to be seen.
Sibylla, thank you very much indeed for joining us today. Sibylla Gross of Bloomberg, metals and mining reporter. Thanks very much indeed for watching our show. Morning Markets is up next.